Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free technical video report for Wednesday, January 10th, 2017. Happy New Year. I hope you guys had a fantastic holiday. We've taken a little break on the free videos. We've been pretty busy on back-end stuff, and we're here and now ready to get things going and kicking off 2018. So the market's been on pretty much a tear, and it is what we've been actually saying for going into December, that we were looking for a pretty strong rally to come right into this time period. And what we, from a technical view, what I was showing was that we had this bull flag here, and we didn't have any bearish divergences from this high. So we had to give more value to this consolidation pattern breaking out to the upside. And that is exactly what happened. And the way that the trade works is that once we took out this high, because it was a higher high, it triggered a long trade. And basically what you were doing was just kept putting your stops at where we had little dips. And you went all the way up into this area here at the 27.48. So it was a real nice trade. It's kind of boring on our end because we don't really have to say too much. It's just raise your stops and that's it. But the thing is that as we are running up here, we knew when to start looking for the top, and from that, the way that this really setup would work on a 60-minute chart would be that you would want to, it would really have to go all the way down into, you know, this level here before it would trigger a short trade. But when we take a look at a 15-minute chart, here you can see that things were lining up a little bit different. And here was your you know, where we made a dip and came up. So it was really a trade below the 27.54 that was getting you out of the long positions and possibly short. And today was really the first short day that that we took on it. And I'm not even sure if it's an all-out top yet, but we know that we're in a time period where a top is due. And I'm going to show you. This is going back to our December 21st report 2017, and these links are in the email, so you guys can go read them all through and you know, see for yourself what was said. But what was you know, what he was looking for was that we have we had a good rally that was in place, and that we didn't really have any reason to be looking for any kind of short position, because the next timing cluster was due near January 5th. So it may give rise to some soaring prices. So this was matching up with what actual price was doing, and all you had to do was just kind of manage things. But as we got into close to the January 5th, what I'm going to show you now is what came out on, this is our first report, and this is on January 2nd, that we actually zoomed in a little bit closer to those to the dates instead of near January 5th. What he had said is that the timing cluster is due near January 8th to the 9th. So if we go back and take a look at what the S&P did, it rallied all the way up, and this was on the 9th, where we had the S&P was up almost 12 points, and then from there closed down near the lows, and today it gapped down. And what we're looking for now is either if the bulls can push it above the 27.50, my guess is they're going to do a test of the top here, of the previous top, and if it fails, then what happens is you simply know where to set up your short positions. It's when we take out the previous lows. Now, the reason why I'm saying short position, even if they come up here, is because we don't have a timing low that's due for, yeah, I can't give you these dates on it, but everything is lining up for exactly what we were looking for the timing cluster near the 9th, the 8th or the 9th, to be some type of top. and we have enough wave structures that are in place, so it was something to pay attention to. And like I said, once we came out today with the gap down, it was a short, and now we have another. If it bounces up, you want to simply look for the short up somewhere up into the 27.54 level, and you can either put a stop at the 27.59 or give yourself a little bit more room, because we know that the next one is most likely is going to be a swing trade to the downside. But if I go back to the report now, what is what Woody's been saying on this is that once this actual low is in place, which, like I said, I can't show you the dates, it's going to be probably another buy the dip trip, and stocks can have some surprising setbacks at any time near term. There's a timing cluster near January 8th or the 9th, which should provide a very big volatility. So we're looking for, there's going to be a top that was coming here, but now we also know when the low is. So that's one of the reasons why right now, with the wave structure the way it is right now, where we have the 5 waves, on the 15-minute we have the bearish divergences, so we look for the short position because we have the timing that's here, we have technicals that are in place, and if I go back and show you this, if we take a look at sentiment, that's been at extremes also. But as what are you saying? On these, when we're getting these 100% sentiment readings here, yes, it can do a quick setback, but it doesn't mean that it is a bearish call on that, because we didn't have the timing in place. But you can see that everybody, the majority is bullish on this market right now, and we knew we had the time frame that's coming in, as well as the wave structure. And if we go to the 60-minute chart, we then have bearish divergences as well. So for me, in this area here, because of where we are with the wave structure as well as time, I'm simply looking on the short side from this. And like I said, from the long side, from the break here, it was a great run, but we knew we were running into the time period that we were expecting some type of top to hit. So now you don't, which most people are hanging on to it because they think we're going to the moon. But what happens is we get a drop here, and then if these lows get taken out, we start to see some panic, and people start asking, what's the catalyst for a top? Sometimes there isn't a catalyst. It's just a matter of people are uncomfortable with the gains they have that have taken place so fast. So they start taking profits, and everybody that missed this rally, what do? They start buying the first dip, and then what happens when these get taken out, they start averaging in, and before we start actually going through real support, everybody's panicking, and then we have a very, very strong bullish run that's now turning into a bearish run. So we're simply, we know the timing period is here. We know when to expect the actual low to hit, which is going to be another buying opportunity. But the reason why it's important is, if this wave 5 that I have labeled on the 60-minute chart here is in place, it is then showing us that this wave 3 is in place. And if that's the case, this wave 4 could take the S&P down to the 2539, 2403, or even down to the 2292. And that typically, as we know, the way this market works, it's all in or all out, will happen in a very fast manner. And especially since we know when to expect a low to come in, it is going to be in a fast manner. So knowing when to when to ride the move up, which was there, and then when to get very cautious on the move, because we were running into a timing area, allowed us to kind of position our trades. And now when we had the break, it brings us to a short position, and we start doing the same thing, and the stop goes to the previous highs, and you ride this as long as you want. So now we're adding in, we have the timing period that that Woody lets us know when to expect volatility or a top or a low. We know we have the technicals that are in place, and then we also have the sentiment, which is really important. But then we also have this little trading kind of a no-brain trade system where you're simply moving your stops at the low or the high, whatever direction, whatever position you're in, and you just let things roll. Because when you try to guess where the top is going to be or where the low is going to be, this is what happens. But when you know when to expect the top to come in, especially when Woody is letting you know that this is the timing indicator, then you can start tightening your stops, and you take a little break here, and once it breaks it, that gets you out of your long position. So it was a fantastic ride, and now you're either neutral or shorting this market right now, and that's exactly what's been going on. So I'm going to be being more consistent with these the free videos on a weekly basis, but what you have to understand is that you don't try to guess when these dates are or what's going on. A lot of people take these free videos and then they make trades off of them and get angry because they don't know what we're actually telling members. This is our free version of it. That's what it is. It's free information. We are a business. We're here to make money, so I can't give you all the information that the members have, but we can give you, some pretty important information that you can try and guide your portfolio. But if you really want to know what's going on, you want to become a premium member. So with that, have a great night, and I'll talk to you guys next week.